So welcome to the first session of the first day of the conference, which is titled as Overcoming Regulatory Challenges Posed by Technology Disruptions and Technology-Based Unregulated Financial Intermediation. For this session, we have invited some of the strongest minds of the industry who are hands-on involved in leading their respective organizations and creating lasting impressions in the world of Islamic finance. So it gives me immense pleasure to call out their good names and request them to join me on the stage. Professor Dr. Humayun Dar. Professor Dr. Humayun Dar, he is primarily an Islamic economist and spearheads a research institute called the Cambridge Institute of Islamic Finance as its Director General. Dr. Humayun will be acting as the session moderator. Amongst the session panelists include His Excellency Dr. Mahir Sheikh Hassan. He is the Deputy Governor of the Central Bank of Jordan. Dr. Mahir is an economist, a researcher, and also winner of the Exceptional Leadership Award from the IMF. Dr. Ghayat Shabsheikh, he is the Assistant Director, Monetary and Capital Markets Development of the International Monetary Fund, that is the IMF, where he primarily covers central banking and fintech-related issues. Dr. Abdullah Muhammad Al-Awar, CEO of the Dubai Islamic Economy Development Center, or the DIEDC. Prior to this role, he was the CEO of the DIFC. Dr. Bello Lawal Danbatta, Secretary General of the Islamic Financial Services Board, or the IFSB, which is based out of Malaysia. Dr. Bello is also a member of the AAOIFI Accounting Board. And His Excellency Mr. Mohammed bin Abdullah Al Kuwais, Chairman, Capital Market Authority, Kingdom of Saudi Arabia. Is he here? Okay, maybe he'll join us later. So we can start the session. So we have allocated 1 hour, 30 minutes to this session, and I leave it at the discretion of the session moderator, Professor Dr. Humayun Dar, to please plan the discussion accordingly so that we have sufficient time for Q&A as well. Thank you.
Bismillahir Rahmanir Rahim. Ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. And a very warm welcome to this panel session on overcoming regulatory challenges posed by technology disruptions and technology-based non-regulated or unregulated financial intermediation. Technology is in vogue. Okay. It is reshaping individual behavior, family interactions, and social values. And it is seen to be disrupting businesses, including the businesses conducted by financial firms. And as part of it, this is what we are going to discuss, this is affecting Islamic banking and finance potentially. Now, because of this overwhelming use and emphasis on technology evangelists are coming up with frequent prophecies on the nature of the business. There are some technology evangelists who would say that traditional businesses are going to disappear. And because we are here in a banking and finance conference, fintech is supposed to have a big effect on what banks in the high streets have been doing. I come from UK, and in UK, every month there is a new landscape. The bank branches are fast disappearing, giving way to digital banking, online financial solutions, savings and loan arrangements, which are moderated by technology. Okay. So all these things, they are relevant to financial services industry in general, and of course they have relevance to the future of Islamic banking and finance. To discuss the relevance and effect of technology/financial technology on Islamic banking and finance on a macro global level, national level, institutional level and product level, we are very fortunate to have a panel of very able experts coming from diverse backgrounds. We have with us our first panelist from regulation background, His Excellency Dr. Maher Sheikh Hassan, Deputy Governor, Central Bank of Jordan. He is with us as our first panelist, and I would be asking, and of course you can ask him questions about the regulation of financial technology and what are its implications for the development of Islamic banking and finance. We would ask him questions about Jordan, but of course other relevant examples can be brought into the discussion. Our second panelist is Dr. Ghiat Shabsil, Assistant Director, Monetary and Capital Markets Department, International Monetary Fund. He is an expert who has been involved in Islamic finance for a long time, and his expertise and insight into technology relevant to financial services while sitting at International Monetary Fund and having a global view on these developments would be of utmost importance and relevance, and of course of interest to the audience in this hall. Our third distinguished guest is Mr. Abdullah Muhammad Al-Awar, CEO of Dubai Islamic Economy Development Center. Dubai is known for the use of innovative technologies. And DIEDC, this is part of the vision of Sheikh Mohammed, the ruler of Dubai, and Vice President of United Arab Emirates and the Prime Minister, who would like to make Dubai as a global center of excellence for Islamic economy, and as part of it, Islamic banking and finance and technology is seen as playing a big role. So we would be listening to him with examples coming from Dubai/UAE and their relevance to the development and growth of Islamic banking and finance nationally as well as globally. And last but not the least, we have Dr. Bello Lawal Danbata, Secretary General of Islamic Financial Services Board and member of the Accounting Board of AOIFI. He has very deep insight into the regulatory frameworks for Islamic financial products and services and institutions, and we would be asking him questions about the regulation of financial technology in the context of Islamic banking and finance. So I welcome all our four panelists, and to make sure that you are engaged with us, I would like to request you to give a big round of applause to these four panelists before we start. Let me start with a general statement. Global Islamic financial services industry stood at $2.6 trillion at the end of 2018, a figure we published as part of our last Global Islamic Finance Report, GIFA 2019, the major focus of which was on artificial intelligence. The growth rate, annual growth rate exhibited by the industry was 6.58%, which was slightly better than the previous year growth rate of 6.02%. When we look at the global Islamic financial services industry data for last 5 to 7 years, we find that this hyper growth era of Islamic finance is over. We used to talk about 15% annual growth in Islamic financial assets, which hasn't taken place for last 6 to 7 years. At best, we have about 6, 7, 8% annual growth in the global Islamic financial services industry. And this can be seen as a slowdown of the industry. And technology may be looked up to bring the required growth in Islamic banking and finance. If we want to go back to this 15% annual growth in Islamic financial assets globally, then new frontiers, new ideas, and new activities and enabling environment must be created. And I think fintech is one area which is very much relevant to sustain growth in Islamic banking and finance. Now, fintech is being seen as a solution. All of us on a daily basis in our social media groups, online groups, and in the conferences like this, we talk about the technology. We talk about fintech. We talk about digital banking. We talk about online banking services and so on. The question arises, this emphasis on technology in finance, is it really relevant to Islamic banking and finance or not? And I would like to start with His Excellency Dr. Mahir Sheikh Hassan, asking him a question about Jordan first. Now, Jordan is a very important player in Islamic banking and finance with 16 to 17% market share of Islamic banking in the national banking and banking sector. Now, I would like to ask you, do you think that technological disruptions in Jordan are going to help the Islamic banking and finance more than conventional banking and finance? In other words, I'm asking, do you think that Islamic banks and financial institutions in Jordan are more equipped with adoption of technology than their conventional counterparts, so that they actually are in a better position to grow faster than conventional banking and finance to capture more share in the national banking and finance?
Thank you, and it's a pleasure to be here, and thank you for having me here. Well, I think it depends on how Islamic banks in Jordan are prepared to benefit from the advance in technology. So it depends on the 4 Islamic banks who are operating in our market, where we have 24 banks in Jordan. It's true today that their market share is close to 17 or 18% of the market. The advancement in technology, if it is used in an effective way, could be an advantage for Islamic bank for a simple reason, which is most Islamic banks in Jordan focus on retail financing, and to some extent to SMEs, and their share from corporate is relatively smaller compared to conventional bank. And if we look at technology, most of the advancement actually is happening in the area of financing of retail and to some extent SMEs. Given that the preference of those who usually obtain finance from banking sector when it comes to retail and SMEs to obtain that from Islamic bank, then this is a great opportunity for Islamic bank if they really succeed in taking advantage of this development. Now, that would require a change, and I would say change in the mindset of those who are running these banks, and that starts usually from the board of directors, where they see this as an opportunity for them to grow, and they see it also as an opportunity for them to minimize their risk if this is managed in an effective way. For us in the Central Bank of Jordan, what we have done over the last few years is trying to level the playing field between conventional bank and Islamic bank. And I would say for the first time in the history of the Central Bank of Jordan, many programs that we developed to support especially the SME sector were designed in a way that facilitate the participation of Islamic bank in a way similar to conventional bank. And what we found from data, especially for the program that support SMEs, that the demand from Islamic bank and the market share of Islamic bank was higher than the market share of conventional bank, which confirmed that the demand for such services is quite strong, that the preference is for Sharia compliant product, and what needs to be done is really to develop these products in a way that meet the requirement of the customers of financial institution and the customers of Islamic Bank. One important thing that was done also recently, and that was actually done in 2019, where we amended the banking law in Jordan, was related to enhance the resilience of Islamic Bank, because with this development, with the use of technology, a new type of risk exists. And looking also at the industry and Islamic banking industry, we noticed that it's a very conservative industry because of the inflexibility when it comes to compensating depositors. As you know, if for specific reason the profit of Islamic financial institution is quite low, the return for the depositors will be quite low. And it's true that Islamic bank or Islamic financial institution can donate part of their profit to the depositors, but there is limit for that. And that led to a conservative investment strategy in Islamic bank and led to what maybe Governor Maraj in his introductory remark referred to the fact that we are in Islamic finance industry deviating to large extent from maqasid al-Sharia, the objective of Sharia, and trying to mimic conventional bank product to minimize the risk. So what we have done, and I think it's one of the few countries in the Islamic world who have done that amendment, we amended the banking law where Islamic bank in specific circumstances can assume the loss that could result from credit and finance and market risk. And I think this is significantly different from the approach of other laws and approach of other regulatory environment. So right now in Jordan, if you are an Islamic financial institution or Islamic bank, and for some adverse market development, there are losses, you don't have to pass this through to the depositors, and it's at the discretion of the bank to assume such losses. What this did is really bring Islamic bank in line with international standard, because if you recall from Basel III, the objective was to enhance the loss absorbency capacity of capital. And actually, with allowing Islamic bank to assume such losses, today the capital, the buffer that exists in Islamic bank could be used to all type of risk, not only negligence and misconduct within if it happens for a specific Islamic bank. So again, to try to be brief, yes, it's opportunity, but it depends on those institutions. I think it's important for this opportunity to be utilized in a way that is consistent with maqasid al-Sharia. What we have done in the Central Bank of Jordan is try to level the playing field for conventional and Islamic bank and enhance the loss absorbency capacity of Islamic bank by this amendment to the banking law. And also we are paying significant interest to the risk that is associated with the use of technology through advanced regulation when it comes to IT governance within the banking sector in general, and recently establishing a FinCERT, Financial Cyber Emergency Response Team, jointly between the Central Bank of Jordan and the industry to help the industry manage the risk associated with the usage of such technology.
No, thank you very much for this detailed insight into what is happening in Jordan. But don't put this back. This is a very interesting remark from your side, which may suggest that technology can be used for improving Sharia assurance process. Okay, and of course meeting the higher objectives of Sharia. This is a point we would come back to during this conversation. But I wanted to, as a follow-up question, I wanted to ask you, is there any fintech player in Jordan outside banking sector which is posing some kind of threat to the traditional services of banks in the country?
The Answer is yes. There are fintech company, and I think one of the oldest, which is called Liwa, and their business model is really collecting investment to finance project in a way that is Sharia compliant, and their business is growing. I don't think they are representing at this point a threat for Islamic Bank in Jordan. But what was interesting for us as a regulator, that this company and others actually who are operating in the area of which we could call fintech are interested to be part of the regulated entities. So they would like the Central Bank of Jordan to develop its regulated or regulatory framework so we can include them as part of the regulated entity. And their point is, once we are regulated, the confidence of the public in us as an institution will increase. And if this happens, and actually we are working on this, we are reviewing carefully the legal basis for this, and we are trying to do it in a comprehensive way so we could regulate both function and institution at the same time. If this happens, I think they could start posing sort of threat for the traditional way Islamic bank operating in Jordan. Because once they are regulated and if they can compete on prices and return, I think many people, especially in this environment of low return, low interest rate, which impact also the return of Islamic bank, they might be a good competitors for Islamic banks.
All right, okay, thank you very much. Let me turn to Dr. Ghiyath Shabsil, who, having been at IMF for quite some time, must have a global view on the technological innovations and disruptions. Dr. Ghiyath, in your view and opinion, is technology helping to reduce incidence of financial exclusion? And what is the evidence coming from different parts of the world in this respect? Is technology helping Islamic banking and finance, or is it being left back by the conventional banking and finance?
Thank you very much, and let me thank also our hosts, AAOIFI, for inviting us. This is a very interesting and informative session, hopefully. Let me put things a little bit in perspective. So fintech is not coming out of vacuum. Technology has been transforming societies, economies, governments across the globe for quite some time now. We have a whole generation now that is used to communicate using telephone, using applications, rather than in normal ways. So the expectation of that generation has changed completely as how services should be conducted. And that's why when fintech started coming, when technology started moving into the financial services, and this is not something new. This has been in the making now for 10 years almost. Suddenly, they found a very big and ready audience. That audience that is already using technology to do everything else almost. And that gave them, that immediately catapulted all of those startups who are inventing new ways to adapt the technologies to financial services to rapidly grow. And we've seen that across the world. Fintech has made huge impacts everywhere. And interestingly, the impact was more in less developed economies, more in emerging markets than in advanced economies. Whether it's in mobile payment, whether it is in the use of platforms, even sometimes in terms of using machine learning and artificial intelligence. The biggest growth market for fintechs were in Asia and Africa, less so in advanced economies. But to give you an example why this is important, this is what we call network externalities. These technologies can create huge network effects. Good example, WhatsApp. 10 years ago, there were 0 users of WhatsApp. Now we have about 2 billion in a very short period of time. So when these companies start taking technology into the financial sector, they made a huge impact. They are not yet, they have not displaced commercial banks, and it is not, they have disrupted their business model, that's very true. And they have disrupted them in areas like in payments, for example, disrupting them, their business models in terms of mobilizing funding. In many ways, it starts showing how to unbundle the financial services that banks used to provide. So you used to go to a bank to get everything. Now you don't need to go to a bank. I can have one provider for my payments. I have another provider for my deposit, a third provider for my financing needs. Not only this, but also technologies allowing customers, financial providers to customize the services. Banks provided aggregate general services to everybody, the same loan for everybody, the same financial product for everybody almost. You only customize for high net worth people. Well, technology now is allowing you to customizing to the individual level. Robo-investment platforms right now can give you precisely the kind of investment profile that you want, the risk profile that you want as an individual. So it's no longer providing you class coverage to everybody. Now, are banks threatened by this? Well, banks have taken notice, but what we have seen so far is that these new disruption to the traditional financial services are not necessarily replacing banks, but they are changing the way banks are doing business. And many banks across the globe are adapting and implementing actually technologies. You go, for example, in many countries. In the United States, you see medium, small-sized banks, community banks have all migrated to the cloud. Their core banking have migrated to the cloud. They are no longer doing core banking in their headquarters. As Dr. Humayun said, branches are disappearing in many countries. The use of many people, younger people, never saw a bank in their lives. They probably will never see a bank in their lives. All their business, they are doing it over the platform. Now, until a year ago, when we talked with regulators across the globe, nobody was particularly concerned. They all see that fintech is pushing the regulatory parameter. There are new activities, new issues. We are not exactly sure how to regulate these activities. If a platform providing financial services of others, do I regulate the activity or regulate the platform? It's not clear, so there's a lot of debate going on. But then, a few months ago, one of the big techs went into that business, and I'm talking about obviously Facebook, Libra. And suddenly everybody awakened to the potential of fintech, of making major disruption at the global level. The G7 went into high gear, big action. They issued a report. You must have seen the report. At the annual meeting of the IMF, you can download it and read it. So everybody has taken notice now when the big tech start coming in. That will become major disruptions when the big tech with their big external networks and they can really reshape the whole institutions. Now, these also are creating a new kind of risks. Now, if banks are moving into the clouds, all right, how many cloud providers are in the world, in the globe right now, that can provide banking services? 5, 3, 4, 5, that's it. They are providing the bulk of cloud services for the rest of the world. What does that make these institutions? Do I regulate them or not? They are not financial institutions. So there's a lot of difficult questions that standard setters and regulators are looking at. When it comes to Islamic banking, they are going to face the same challenges. They are no exception. The difference is that from our own research, fintech penetration in areas where Islamic banking exists, not all countries, but in most jurisdictions, fintech penetration is still low for many reasons. I mean, maybe we can discuss it some other time, but for many reasons, fintech penetration is low. And so they have not yet presented a major challenge to the business model of Islamic banking, but they will. I mean, this is not a prediction, this is the trend that is going on right now. And Islamic banks have to adapt. Now, come to it, if you think about it carefully, technology provides a golden opportunity for Islamic banks on a number of fronts. One of them, for example, Islamic banks have traditionally higher operating costs, just the nature of Islamic banking. A lot of that operating cost can be reduced by technology, substantially, by the use of technologies. Compliance is a major issue for many Islamic banks because they have an extra layer of compliance they have to do, which is Sharia compliance. But also the interaction between Sharia and stability compliance, these nexus also require additional layer of compliance. Many of these compliance issues can be addressed through technology. So there is huge scope. One area that I've heard people talking about is reintroducing a product like Musharaka and Mudaraba. These products were difficult to monitor, difficult to execute, expensive to execute, but then technology can provide a huge amount of relief on this area to facilitate Musharaka and Mudaraba. And why this is important? We are just talking about the environment of low interest rate, low return to banks, all banks. Well, one area where return can be higher for Islamic banks if risk managed properly and if done properly is in the Musharaka and Mudaraba sphere. So these are opportunities for Islamic banks, but they need to adopt the right technologies for that. So maybe I should stop this as a brief introduction.
Oh, thank you very much. In order to make this an interactive session, I'm warning that some of the participants in this hall, they might be asked some questions. So particularly, I can see quite a few people coming from Pakistan. So Mizan Bank is one example of the use of technology. So I might be coming to Ahmed Ali, to you as well, asking to share some of your views on the use of technology in Islamic banking and finance. But before that, I would like to turn to Abdullah Muhammad Al-Awar. Dubai, as all of you know, is a center of attention when it comes to technology adoption. Dubai Islamic Economy Development Center has been mandated to develop Dubai as a center of excellence for Islamic economy. So I would like to ask Abdullah, what role you envisage for the technology to play in ensuring that Dubai/UAE becomes a center of excellence for Islamic economy and as part of it, Islamic banking and finance?
Thank you. It's at the outset, of course, it's certainly my pleasure to be here. I wanted to extend my gratitude as well to the organizers for arranging this important conference. I think based on what my esteemed panelists have mentioned, I'm not sure if I can top that, but as far as the UAE is concerned, obviously, technology and technological advancements in all sectors, I would say, not only financial services, is a key factor. And we have nationwide strategies that revolve around technological advancements, a Minister for Artificial Intelligence, a whole roadmap towards embedding innovation and the innovation culture within both social and economical domains. So there is no doubt about that. But if I can maybe go back a little bit about around Islamic finance, my colleague Dr. Ghait mentioned, I think, a very important aspect in terms of why fintech is not penetrating the Islamic finance space as much as it does on the conventional side. I think we need to take a view, step back maybe and take a view though on the size of this sector. I mean, you read, I'm sure the esteemed guests here would read a lot of reports and statistics around the size of the Islamic finance sector. One particular one I came across, of course, was a report issued by Thomson Reuters, now Refinitiv, the state of the global Islamic economy, that highlighted the forecast and the potential for the Islamic finance sector is to grow to around $3.25 trillion in terms of size by 2021. Now, if you take a look at that figure and compare it to the conventional financial services universe, you will find that it's extremely small. And I think that's a fact today. Islamic finance is a very small component of the greater, I would say, or conventional financial services domain. Now, in my opinion, I think that puts pressure on the sector to adopt technological advancements. As my esteemed colleagues mentioned earlier, it's not a question of whether they should. I think there is no choice. If we are to unleash the true potential of the sector, then embedding innovation and technological advancements into the whole sector is a must. The question is, what are all the stakeholders doing about it? Or are they doing enough about it? We know that there are entrepreneurs out there, small and medium-sized businesses across the Islamic economy, I should say, that have brilliant ideas. How much support are they given? How much of a level playing field are they provided with to present, these ideas? And that's, I think, an important aspect to keep in mind, because as the government and other government bodies, I believe their role should be to create that ideal platform, the ideal environment for these ideas to flourish. And some, of course, economies and some jurisdictions have done that. We, particularly in Dubai and the UAE, have tried to create that platform for not only Islamic fintechs, but other entrepreneurs that want to present their ideas and even test their ideas. Regulators, and I know for regulators, usually it's a very difficult approach, because they think about a lot of other things and the risks associated with introducing the ideas. But I believe the regulators also sometimes should step out of their comfort zone. In Dubai, particularly in the DIFC, I recall last year, the Dubai Financial Service Authority, which is the regulator in the financial center there, introduced a license called the Innovation Testing License. And they did that to support these fintech players. There is an accelerator, a financial services accelerator there called the DIFC FinTech Hive. And as part of this FinTech Hive, there are conventional fintech players, but also Islamic fintech players that that have applied and that wanted to present their concepts. And the regulator there stepped up and said, okay, you know what, if the idea is great, it supports the financial services community, why not try the innovation testing license for it to grow and to flourish? And I think that's a perfect example where the regulator is working with the industry to encourage innovation. And I think more of this should be seen elsewhere as well. I think there is no doubt in terms of the need to embed technology. There is this might not be directly related, but it's interesting. I wanted to share it with you because I read somewhere that banks have over the last 10 years witnessed a drastic increase in the number of bounce checks for the age group between 18 years old and 28 years old. And the report or the article mentioned that the reason for that is because they noticed that this particular group of people, they are not consistent when they're signing checks because they're not used to writing. They're using iPads, they're using their phones for transactions and for everything that they don't need to write checks. And that's why their signatures are always inconsistent and hence the checks are being bounced. So if that's a sign, I think it's a sign that, yes, technological advancement is a must because the end user, the customer is already embedding that. So I agree with my esteemed colleagues that there is no choice except for the industry to absorb technological advancements.
Very interesting, actually. There are a lot of interesting things happening in Dubai. On the 29th of October, Abdullah, I read in the newspaper that Dubai launched an artificial intelligence-based fatwa platform. And Dr. Arbuna, probably, he would be very happy to learn more about the details of this program, because it has direct relevance to Islamic finance.
Yeah, it's more, I believe it's more general rather than just financial services focused. It's an initiative that is launched by the Islamic Affairs Department of Dubai, and perhaps this is phase one, and I think it's a good phase where they receive quite a large number of fatwa requests on a weekly basis, and I think this initiative compiles fatwas that have been issued and links it to the area of inquiry, and I believe hence the fatwas are shared. But I think it's a good start. It's going to be, I believe, challenging as they go forward, but I certainly think it's a good start and it's a clear message that there should not be a reason why not to embed such technological advancements in this area as well.
Thank you very much. Now, when we were planning this session, Dr. Bello Lawal Danbeta, he requested me not to ask him very difficult questions. However, the most difficult question is coming to him because he is involved in creating regulatory frameworks for Islamic banks and financial institutions. And the question, Bello, for you is, Islamic Financial Services Board, is it working on a new standard for technology use the use of technology in Islamic banking and financial institutions to ensure that the risk that emanates from the use of technology in financial services, especially with respect to Islamic banking and finance, that is minimized? There is a general kind of perception that technology actually reduces what is known as Sharia risk. And it might not be a bad idea for an industry infrastructure body like Islamic Financial Services Board to start looking into issuing a standard on the use of technology for Sharia assurance along with accounting and auditing organization for Islamic financial institutions. So what would be your reaction to this specific question? But of course you can start with the standards issued by IFSB in the field of Islamic banking and finance so far.
All right, Bismillahirrahmanirrahim. Once again, good morning to all of you, and Assalamu alaikum wa rahmatullahi wa barakatuh. I would like to first of all thank AAOIFI for the invitation and for organizing this conference based on this wonderful, important theme. It's a very timely and is very relevant to the growth and resilience of the Islamic financial services industry. Before I respond to your question, I think it is important for the benefit of those that are not familiar with the IFSB, for me to shed some more light of what IFSB is all about. The Islamic Financial Services Board is an international standard setting body, particularly focusing more on prudential standard setting that complements the work of BCBS, the Basel Committee on Banking and Supervision, as well as the ID, IIS, and ISCO. That is to say, it is a standard setting body that set prudential standard for the three sectors, banking, Islamic capital market, as well as takabul. And as well as we complement the work of other institutions that set standards. IFSB was established way back in 2002 and we commenced operation in 2003. So we're a little bit younger than IOP in terms of establishment. But however, today the IFSB membership, we have about 182 members from 57 countries, and 79 of which are regulatory and supervisory authorities, and 95 market players, and 8 international multilateral organizations, including the IMF, the World Bank, the Islamic Development Bank, the Asian Development Bank. They are all members of the IFSB. We issue prudential standards. Our work is not in any way competing or with the work of IOP or any other standard setting body. We complement the work of this other standard setting body. Now, given this background, the focus of the IFSB is more on prudential regulation, particularly with regard to the risk management aspect of technology. Today, as I'm talking to you, we will be before the end of this year, issue the first standard for prudential regulation on financial inclusion, which is our technical note 3. This standard has been completed, the entire due process has been completed and is about to be issued. And in this particular standard, we try to cover important issues related to financial inclusion in terms of, not only in terms of instruments or governance or risks, but we are looking about the broader perspective in terms of initiatives that are aimed to address the financial inclusiveness. And that is to say, this technical note 3 will be involved, in issues on Islamic microfinance, Islamic social finance, zakat, sadaqah, and waqaf, as well as an instrument for Islamic financial institutions, and then including collective investment schemes and fintech. So there is a dedicated section in this particular technical note that talks about the potential risk element related to fintech. But when we are talking about technology, we should understand fintech or financial technology in not in a very smaller perspective, or is something that is new. Fintech has been in existence for many years. Since when we started internet banking, we started ATMs, and all these are coming up with a new innovation and with new risk. Now, the challenge that we have is basically now we have new set of customers for the financial services industry, which are the millennials, just like what Dr. Abdullah just mentioned now. The millennials, naturally, they are somewhat in a haste. They are very friendly with technology. They are not used to traditional use of banking or writing checks, as he's rightly mentioned. So technology will be their best friend, and these are the future of tomorrow. So as a result of that, this type of customers may be prone to accept anything that is efficient, anything that is not going to waste their time. So as a result of that, there will be new risk profiling. And now we have seen, based on the result of many studies that is being conducted, with regard to the issue of fintech, some banks are coming forward to work with these fintech companies. Now, if they are coming to work with this fintech, there should be some kind of concern as a regulator, insofar as they are not owning these fintech companies, because there may be a potential third-party risk. Now, if cybersecurity risk is one of the major concerns that we currently have, and we have seen a lot of cases in South Africa, in Bangladesh in the past, and many other countries with regard to cyber risk issues, then the focus of the standard setters, as well as any regulator, will be how to mitigate this cybersecurity risk and how to ensure that technology, it is being used in a more efficient and more prudent and reliable manner. So at the IFSB, now we are currently revising our IFSB 15, the standard on financial regulation for capital adequacy for Islamic financial institutions. And we are being proactively ahead of even other standard setting bodies, including the BCBS, by having, based on the guidance of our council, to have a dedicated session of this standard, a particular section of the standard, dealing with cybersecurity risk. So this is something that we believe is very important and is really, really relevant for us to put our efforts in. Another important update that I would like to share is we last year signed an MOU for the first time together with IOP to come up with an initiative that we avoid any duplication and we work together. And we have already commenced a project by revising our IFSB 10, that is Sharia governance standard. In this standard, is aimed to replace any Sharia governance standards or to update any Sharia governance standard that is being issued for the Islamic financial services industry. And as part of the initiative that is being taken by both IFSB and IOP, despite we have this sectoral division of the standards, we are focusing to ensure that there is a dedicated section under each of the sector that deals with Sharia governance issues related to technology. So this is something that I believe that is very important as well, that we need to share with the industry. Now, in addition to that, we are currently working on an important research that focuses on fintech, regtech, and supertech, and we have a joint collaboration to embark on a new research together with the World Bank on this particular area. So these are all aimed at looking at the new profiling, the new risk profiling, the potential risks in terms of the regulation with regard to the development in terms of technology. Having said that, it is also important for us to know that it is time for the regulators and all the standard setting body to start looking at regulation that is based on the business models. Should there be different capital requirements for institutions that are maybe more exposed to technology or more use of technology compared to those that are still using traditional, financial services? At the same time, the regulators should as well, and we as a standard setting body, we are looking into how we can leverage on the technology to promote more resilience and growth of the global Islamic financial services industry. So we are, like, in a way, cut between resilience, stability, and risk management. So whatever standard work that we are going to do, it has to focus in balancing this. Now, the initiative by, I must commend an important initiative by the IDB, in which was mentioned this morning by His Excellency the President of the IDB, by having IFSB, IOP, IFM, Chibapi, and all the infrastructure institutions coming together as a platform. We have this consultative group under the platform of IDB, and we intend to digest and ensure we do not replicate or duplicate any efforts when it comes to issue related to regulation, as well as documentation, as well as operations with regard to technology. So it is quite relevant that we get a feedback from platform like this on how to move forward. I believe the discussion is not meant only for the regulators, and I hope to hear more from the audience when it comes to what will be their main concern and what are the areas that they will like the standard setters as well to focus. Having said that, before I wrap up, I hope I'm within my time, that it is important that we look at the future. The future of Islamic finance is bright. So much effort has been placed on banking. And we believe banking is really necessary, but we have to be mindful that banks are not necessary. So as a result of that, the future of financial services industry goes beyond what we are currently having in terms of the infrastructure. Our legacy infrastructure needs to be looked into carefully. The regulators, the market players need to invest heavily in enhancing our legacy infrastructure to ensure that we accommodate the challenges, the potential challenges of the future. And that's why now in our standard that will be jointly revising the IFS on Sharia governance, the entire infrastructure that are meant to support this development, this revolution, need to be looked into, not only from the regulator's perspective, but as well as from the market players' perspective. So this is something that is very, very essential. The capacity of today's Sharia scholars, the regulators, the market players, while the market players are smarter, the Sharia scholars and the regulators need to be more smarter to be able to catch up with the future development. So I think this is basically the perspective, and I believe I have answered your question, but I'm free to answer any further questions that you may have.
No, thank you very much. This is very detailed response to the question I posed. Now we're left with about half an hour, and it would be not fair with the audience if we don't allow them an opportunity to give their feedback. If they have any questions, any reactions, this would be extremely useful for the panel as well as for the audience. I already have got one hand up, Dr. Yahya Abdurrahman. He would like to either ask a question or he would like to make a comment. So if you could kindly take the mic to him.
Bismillah ar-Rahman ar-Rahim. Thank you for your contributions and your presentation. I will speak as a practitioner, as a banker, running a bank. The question that you need to ask yourself, are we in Islamic banking interested in developing fintech programs, application programs, or using developed application programs? That's the first question.
All right.
Second question is, as Islamic bankers, what is the uniqueness of using fintech? In my shop, our unique use of fintech is what we call wise fintech, because the idea of Islamic banking is to touch the hearts and the minds and the pockets of the people as a window of da'wah to Islam, for Muslims and non-Muslims. For the big corporations like Bank of America and Wells Fargo, they developed fintech to get the customers out of the branch, out of their operations. And the third thing is, which is important to AAOIFI and to IFSB, are the contractual agreements that tailor and control the relationship between the user of fintech and the bank that uses fintech. For instance, I have an application whereby you can take a picture of your check, you push a button, and we get online the check and the deposit is made. The question is, if the check is fraudulent, what are the responsibilities of the bank from a Sharia standpoint? Now, from a Sharia standpoint, we have the rules in the United States that tailor this. But then, what are the Sharia standpoints for all of this stuff? The thing that I've been hearing about for the last 5 years are promoters of fintech programs. And believe me, regardless how rich we are, we will not be able to pioneer something that we can control, because there is billions of dollars spent by large corporations to develop things like PayPal and so on and so forth. So we need to define our goals and objectives as Islamic bankers or riba-free bankers. Why am I saying this? Because there is no Islamic influenza, there is no Christian influenza, there is no Jewish influenza. They are all influenza. They are all cold. What's different is how to treat them. In an Islamic setting, we use cough medicine, which does not have alcohol. But in the Jewish and the Christian medication, they can use alcohol, and so on and so forth. So we need to define that, because of our position, we are going to be followers, not pioneers of programs, because of the cost involved to any bank in our operation. Thank you very much.
Thank you very much. I think before, I have been reminded that we have 15 minutes only. There was another hand, so we take these two questions and then we deal with them on the panel.
Thank you very much for your presentations and the very useful information that you provided to us. My concern is about the rapid change in technology. Technology is growing very fast, and I think the regulations are not in the same line. The regulations are very, very slow when they are compared to the technology. How the banks can make a balance between the rapid growth in technology and the regulations, how they develop the regulations. Second part, I read an article also that is saying in Africa and the Middle East, the use of technology is very low, around about 2% as compared to other advanced economies. Do you think that this is a cultural effects or infrastructure? What are the reasons behind that? And what type of regulations are very specific to the Islamic banks other than conventional banks? Maybe other banks, they can relax their regulations or their standards. It's not possible for Islamic banks. What is the specific challenge that will face Islamic banks with the advancing technologies? Thank you.
Thank you very much. Given that we have only 15 minutes, I would like to sum up with what Dr. Yahya Abdurrahman said. Basically, he said, what is the unique value proposition of fintech in an Islamic context? Okay. And the second question is, of course, technology is improving very fast and regulation is rather slow. And is there any unique kind of treatment of technology when it comes to Islamic financial regulation? Any one of you would like to take Riyadh? Yes.
Maybe I could start on the technology side. I mean, just keep in mind, these technologies are developed by the private sector, non-banks. So it's not developed by the banks themselves. Is this relevant for Islamic banks? Of course it's relevant. It is going to happen. There will be non-bank financial institutions that will come up and challenge the Islamic banks by providing better services, better what we call customer experience. This is what customers are looking for, our customer experience. Give you an example. I mean, in many traditional banks now, mortgage companies, mortgage decisions used to take a long time, 2 or 3 weeks sometimes in the US to come to a decision. Many mortgage companies now can give you a decision in seconds, literally seconds. And the reason they do that because the risk profile assessment is done fast through artificial intelligence algorithms. You don't need humans. And many times these algorithms give better prediction and better outcome than a human assessor. So these technologies are there. They are not going anywhere. Either the banks will adapt to them, and banks are adapting to them, or simply they will lose business. Around the world, the payment part that banks used to provide is rapidly dwindling. Most of the payment services are going outside the banking systems. This trend happening everywhere. And I say here that Islamic banks are not immune to that. Whether they want to develop technology or not, of course, this is a cost issue. But whether they want to be open and trying to adapt and change their business model, I think this is imperative. Otherwise, there will be consequences for that. In terms of the regulatory, I will leave it to my colleagues here, but what we've seen around the globe is that, yes, indeed, there are many challenges that are facing regulators, and there is no consensus at this stage. Even at the standard setting bodies in Basel for banking, for securities, there are no consensus yet. But there is a lot of work going on there to discuss how we address some of those technologies. When it comes to Islamic banking and the point raised on the Sharia and governance, yes, these technologies can improve the performance of Islamic banks from, let's say, from Sharia perspective, but can also go the other way around. We've seen a trend where Islamic banks are using hybrid products. At the IMF, we issued 2 years ago a warning on these products, and we've heard this morning from Dr. Al-Maraj his concerns. So technology can make this trend even stronger. So how do you manage that? So there are a lot of challenges coming up to the regulators and policymakers in how to address banking in general, financial sector development in general, but also the specifics of Islamic banking.
Thank you. I think Riyadh raised very important points, but going back, shall Islamic Bank develop such technology or benefit from what is developed in the industry? I think both could be done, but let's be honest with ourselves. I think Islamic Bank are investing less in benefiting from technology compared to conventional bank, maybe due to size, maybe due to other challenges. And the fact is, it's not only the use of technology, and we sometimes actually mix between things that have been developed 10, 15 years ago, and now we are using them within the banking industries in our countries, and really fintechs. The question is actually, or the point is, we are investing less, and we have another challenge. When you transform the process from specific customer going to the branch and signing the contract to something that is done electronically, you will need a smart contract that is done electronically in compliance with Sharia. So you would need first the bank itself to re-engineer the process in a way that facilitates something like that. And also you would need Sharia scholars to understand not only the usual contract, but how this will be done in electronic format. And that would require an investment that is actually beyond what is required by conventional bank. And the question, are we investing in that? The answer, maybe, but not to a level that is sufficient to enable Islamic Bank to benefit from this advancement in technology. And if they don't do that, we might see actually the phenomena you just described, that the growth in the industry will not be as high as we used to do. The issue of maqasid al-sharia, the hybrid product, actually in Jordan, we took a decision, and it's part of our policy, that we don't like to see tawarruq on the asset side or the liability side on our banks. Maybe it's unique to the industry given what is the practice in the region, but we felt that doesn't add anything to what other conventional banks are providing. The point on regulation, yes, most of the time, not only in our part of the world, but in most of other countries, regulators are moving as a reaction to the development in the industry. However, there are two exceptions, and I think we are doing it in Jordan and others are doing it. Sometimes we review our regulation and laws to enable actually the development of the industry, and this is what we have, for example, done in 2014 when we revised the electronic transaction law in Jordan to allow all form of digital currency to be used within the system. And the second thing that is also in Jordan and many other countries, and Bahrain actually is playing a very important role in this, is having the regulatory sandbox where you gain better understanding of this development at an early stage so you can build the regulation in an appropriate way that could facilitate their work.
Well, thank you very much. Actually, we have 5 minutes. Abdullah, would you like to add in 1 minute, and Bel, yourself?
Just a quick note on the second question. I think the notion around the regulators and what they should be doing. I think if I can just say, not doing anything is worse than trying. At the end of the day, I think the consensus is that you need to adopt the technology and technological advancements, and I think equally important is the regulators trying to work together to reduce the potential risk associated with that. So yeah.
Yeah, I actually, I mean, on the same path with Brother Abdullah, in the sense that we need to be very clear all right? And with regard to the first question, it's all about capacity. There should be a constant capacity building at all levels. Is the key. Because you can imagine if the US predicted by 2030 all banking halls will be managed by robots. We believe that this in the future will also come to Islamic financial services industry. So now you can imagine now a contract that is being signed between a human and a robot. How do we check the validity of that? Which one will be responsible for that? So I mean, it's the same thing with like the issue of checks that you are talking about. So a lot needs to be done in terms of capacity building. And secondly, with regard to the second question, while a lot has been done by the regulators, we must commend at IFSB, we engage with our regulators from many jurisdictions. Actually, regulatory sandbox is just one, but a lot have already embarked on research and developments to address this issue of technology, and they are building capacity in a way. But what is more important is leveraging on the regional coordination among the jurisdictions. There should be no need to reinvent the wheel. So we want to see more coordination among the regulators and among regionals, in the sense that they will leverage on the experience and the expertise of one jurisdictions and the other. So that coordination, that is what needs to be done. So I believe with that we'll be able to address all these challenges in terms of technology.
Thank you very much. When we were actually entering into some very interesting territories, unfortunately the time has ended. I must say that there are a lot of technological applications happening in Islamic banking and finance. I was recently in Indonesia. Indonesians are doing a lot to introduce technology for Islamic social finance. Zakat collection and disbursement, for example, it's a huge area. They actually have a plan to start zakat collection and disbursement on a local level, village level, from village to this small administrative entity, from there to sub-district, district, state, and nation, and of course this can be replicated globally as well. And they have plans to start a global zakat fund as well. So this is an excellent application of technology in the context of Islamic banking and finance. Similarly, blockchain-based sukuk and awqaf platforms. Okay, this is another activity going on in that part of the world. Bahrain, where we are sitting right now, there are a number of very innovative applications of technology to banking and finance in general, including Islamic banking and finance. Islamic banking and finance is treating technology as an opportunity rather than a threat. Okay. And this is probably one of the reasons that the regulatory response to technology is rather slow when it comes to Islamic banking and finance. But I think at this early stage of adoption of technology by Islamic financial institutions, this is more like an opportunity rather a threat. And we are hoping that in due time, regulation would come in to protect all the stakeholders in Islamic banking and finance from the threats coming from the heavy use of technology. With this, I would like to thank the organizers, and of course, I would like to thank our very distinguished panel for sharing their views on this very important topic of immense relevance to Islamic banking and finance. And I am thankful to you all for being very patient and excellent audience. Thank you very much once again. Assalamu alaikum wa rahmatullahi wa barakatuh.